This is Nightly Business Report with Tyler Matheson and Susie Guerin.
Not too hot, not too cold. July's employment report may have been just right, but does it leave the Federal Reserve leeway to keep interest rates low?
Stocks struggle. The major indexes failed to recover from yesterday's steep losses, and the S&P 500 suffers its worst weekly drop in more than 2 years.
And less is more. Why Procter Gamble believes the way to bulk up sales is to slim down. All that and more tonight on Nightly Business Report for Friday, the 1st of August. Can't believe it's August. Good evening, everybody. I'm Tyler Matheson.
And I'm Sue Herrera in this evening for Susie Guerin. Well, the recovery continues to march on, albeit slowly. Today, we learned the economy created 209,000 jobs in July, its 6th straight month of 200,000 jobs or more. And that's something that hasn't happened since 1997. Despite continued improvement, the number was still below expectations, and the unemployment rate ticked up to 6.2%. And that disappointment actually alleviated one of the biggest worries on Wall Street these days, that the Federal Reserve may be forced to move faster on rates than previously thought. Eamon Javers takes a look inside the report and what it means for both the economy and job hunters.
Today marked the 6th consecutive month of 200,000 plus jobs growth in the United States, and we haven't seen a month of job declines since 2010. That's creating opportunity across the economy. The government said today employment in leisure and hospitality has added 375,000 jobs so far this year, primarily in food services and drinking places. And here in Maryland, the state is cashing in on casino jobs. The number of workers is expected to nearly triple to just over 9,000 jobs in the next 2 years. MGM Resorts is building a $1 billion casino at National Harbor, southeast of Washington, D.C.
Good morning.
The doors won't open for 2 years, but they're already recruiting to fill nearly 4,000 jobs.
I think it's an opportunity of a lifetime to open up a brand new facility that's going to be beautiful right down in the National Harbor. And mostly I'm here to find out what exactly they're looking for and what kind of opportunities they have available.
At the White House, President Obama called it unequivocally good news.
So the good news is the economy clearly is getting stronger. Things are getting better. Our engines are revving a little bit louder. And the decisions that we make right now can sustain and keep that growth and momentum going.
The steady jobs bounce back has investors betting on when the Fed might scale back its so-called quantitative easing program, which has driven the stock market to new highs. So far, though, analysts are calling this the Goldilocks jobs report. Not too hot and not too cold. That could be enough to keep the Fed on track, and it could be good news for investors. For Nightly Business Report, I'm Eamon Javers in Washington.
That jobs report and a number of economic reports to boot failed to lift the stock market today, leaving the S&P with its biggest weekly drop in 2 years. Instead, global concerns surrounding Argentina's debt crisis overshadowed any positive data that came out today. At the close, the Dow Industrial Average finished lower by 70 points to 16,493. The Nasdaq was off 17, and the S&P 500 lost a mere 5 points. As for the week, the blue chip Dow Index fell almost 3%, worst weekly dive since January. The Nasdaq had its biggest weekly loss since April, and the S&P lost more than 2.5%. So let's talk more now about the economy, today's jobs report, and what it may mean for the Fed and the markets. To do that, we welcome Chris Wolf, Chief Investment Officer with Merrill Lynch Private Banking and Investment Group, and Mark Zandi, Chief Economist at Moody's Analytics. Mark, let me begin by asking you, was this, as we characterized it at the top, a kind of Goldilocks jobs report, not too hot, not too cold, just about the best you could have hoped for?
Yeah, it was perfect. A lot of jobs, really broad-based across lots of industries, across all pay scales. At this pace of job growth, unemployment will continue to decline very rapidly, but we're not to a point yet where we're seeing any significant wage pressures. Now, from a worker's perspective, that's not great. We want to see the wage growth, but from the stock market's perspective, investors don't want to see too much wage growth because that might induce the Fed to start raising interest rates sooner rather than later.
Chris, does it also kind of confirm what we've all suspected, which is that the economy is growing slowly and surely, and at a pace that is not going to trigger inflation in a big way, at least no time soon.
Yeah, I think Goldilocks was the term that you used. I might call it the good enough market. The data is good enough to not really prompt a lot of changes. I think you are highlighting one thing, though. There's a big sensitivity on the dependence on Fed actions. 2 days ago, it was all about wage inflation, employment cost index, saying that they have to move sooner. The Fed has to move sooner. All of a sudden, today's data says, no, they don't. And we've kind of done these big reversals in the bond market and in parts of the stock market. So I think there's a lot of sensitivity around the upcoming taper that's important for investors to consider. So while the economy is good, I think the markets are going to start to think more about where the fundamental growth trajectory is likely to be in 2015 and 2016, and less about the Fed over the course of the next 6 months or so.
Mark, as he just pointed out, the market earlier this week seemed to be very concerned about the pace of labor cost growth, and that might drive through and cause inflation at the retail level. But as you point out, don't we really want wage growth in this country? And what is it going to take to get it?
Yeah, we absolutely do. I mean, workers, their wages have been growing at no more than the rate of inflation since the recession. So that means real wages after inflation wages have gone nowhere. Our living standards have gone nowhere. So we want to see stronger wage growth. The way to get it is more jobs. So if we continue on the current growth path and continue to create over 200,000 jobs per month, by this time next year, I think the job market will be tight enough that we will start to see that stronger wage growth. And it's at that point, of course, that the Federal Reserve will start to raise interest rates. A couple years down the road, if we continue on the current growth path, odds are, and I think odds are that we will, then we'll have a really good job market. We'll be at full employment, and then we'll get wage gains that are consistent with productivity growth, and that's exactly what you want to see. That would be an economy that we'd all be very comfortable with.
Chris, talk to me about the markets and how you feel about equities at this standpoint. I know you would overweight equities compared to bonds, but this was a wild week. Volatility was back in a big way. We saw some big swings in this market.
Yeah, there's an air of complacency depending on how you think about the different measures of volatility in markets and currencies and equities and bond markets. So I think this week was a bit of a wake-up call in that things should be a little bit more normal when you focus on fundamentals. So equity markets in particular, I think, saw a lot of that. You saw, I think, a lot of the anticipation that the Fed would change, take some profits, take that complacency a little bit back out of the market. But I think you also have to remember the last 5 years have been about a big bull market. We've had big growth in earnings, and that just good enough comment I made earlier about the economy also applies to equity markets. Revenue growth is just good enough. Earnings growth via operating leverage is good enough to keep, I think, the rally going. And this overweight that we recommend with clients is something simple. There's still not a lot of good alternatives in the fixed income market to make a compelling case to buy a lot more bonds. Some is protection, but not a lot more.
Quick thought, Chris. Should individual investors be ready for more volatility as we move through the late summer and into the fall?
Yeah, I think we're towards an inflection point by the time we get to October. There's elections, there's Fed policy change, and really the inflection point is moving from policy-driven markets to fundamentally driven markets. And we think that's a 2015 event. That's what adds volatility as investors start to make decisions about where the fundamental stories are the strongest.
All right, Chris Wolf of Merrill Lynch, thank you. And always great to see you, Mark Zandi of Moody's Analytics.
Thank you.
One of the day's standout stocks, Dow component Procter & Gamble. The company, which owns brands like Pampers, Tide, and Gillette, reported a 38% rise in earnings, beating Wall Street estimates. That sent shares up 3%, making it the top-performing stock on the blue chip average. But the world's largest consumer products maker also announced a big move to get smaller. Sarah Eisen tells us why P&G's CEO believes less is more.
The world's biggest consumer products company has a growth problem. P&G saying today it's shrinking, shedding more than half of its brands to simplify the company and boost sales. It will focus instead on 70 to 80 consumer brands like Tide detergent, Pampers diapers, and Gillette razors. P&G has missed estimates for sales in the last 3 quarters. It's struggling across the board from beauty to healthcare. Part of it is the economy.
It feels, in my seat, a little bit choppy, and I would say that's true across the globe with some of the geopolitical events, et cetera. But against that chop, continued opportunity for growth on both top and bottom line.
And rivals Colgate, Kimberly-Clark, and Unilever all struggled to post stronger sales during the quarter. But many analysts say they expect more progress by now in turning around the company from CEO A.G. Lafley, who returned to the top spot a year ago in an effort to boost growth. Since then, he's spun off the pet care business, cut costs, and launched new products like the Gillette Fusion Pro Glide razor, which the CFO says is selling even with a higher sticker price.
It's actually very reasonable. It's about $10 for the razor. We launched that around Father's Day in June. In the month of June, the male razor category, in the United States was up 30 points, and we started to see cartridge share grow as well.
Part of the problem, P&G is enormous. With more than 120,000 employees, it's been a Cincinnati staple since the 1800s. Change takes time, and investors are still waiting. The stock is down so far this year. It's one of the worst performers on the Dow in the last 12 months and underperforming the broader consumer staples index. To do it, Lafley is going to have to focus on growing the business and not just growing profits. For Nightly Business Report, I'm Sarah Eisen.
Despite big discounts, U.S. auto sales slowed in July. Most car makers reported gains below expectations, but gains nonetheless. Chrysler and Ford both saw double-digit moves up, with Chrysler getting some help from strong sales of its Jeep SUVs, and General Motors sales were up 9% compared with last July. Still, only Ford was able to eke out a number that topped forecasts. Overall, annual sales slipped further from that 17 million unit mark, which would be a multi-year high. Shares of Ford and GM were off 1% today.
And some good news for drivers. Gas prices are starting off the month of August at a 4-year low. According to GasBuddy.com, the nationwide average of $3.51 per gallon is a 15% drop from July 4th, which saw the highest prices in 6 years. And pump prices are expected to continue their slide into the fall because of strong refining output and crude oil production in North America.
And still ahead, our market monitor says there are 3 stocks that will return 20% over the next year. We will pry the names out of him next.
Argentina is officially in default. The International Swaps and Derivatives Association, which makes the determination, decided that a failure to pay event occurred on July 30th, the day that Argentina missed the deadline to pay its creditors. Meanwhile, a New York judge has ordered negotiations between Argentina and its investors to continue.
More now on jobs and what some are calling domestic outsourcing in manufacturing companies. Advanced Technology Services steps in when a client wants to step out of the business of maintaining its factory. And by letting clients focus on their core business, ATS itself is growing and hiring along the way. Mary Thompson takes a look now at where the jobs are.
11 years ago, the maker of E-Z-Go golf carts decided it wasn't very good at maintenance. So Textron Specialized Vehicles hired Advanced Technology Services, or ATS, to repair and maintain the machines that make its carts. It's a decision plant manager Carrie Thompson says is paying off.
Over the last 5 years, we've launched 40 new vehicles to market, and we've expanded our engineering workforce by 138%. So by allowing ATS to focus on the maintenance of our equipment, we can focus on growing our brands and our business.
Since 1985, Peoria-based ATS has been sending teams of 6 to 60 technicians to factory floors in North America, the UK, and Mexico.
Plant managers today have to figure out how to do more with less, and we're part of the equation of how they do that.
ATS Vice President Brian Raby says his firm brings the tools, experienced, and skilled labor a factory might have trouble securing on its own to service its gear.
If you're in a factory today and you have 5% machine downtime, that downtime is costing you a lot of money. If we can take and reduce that to 1% downtime, you now have all that machinery available to be able to produce product and make profits.
Given those added minutes of production are increasingly valuable in the competitive world of global manufacturing, demand is rising for ATS's services. So this year, ATS is hiring 500 new technicians. They'll repair and maintain the equipment that's used on assembly lines like this one. But finding those workers isn't easy, even when you pay them $21 to $51 an hour with full benefits.
Workers in these plants don't grow on trees, but they do grow in other industries.
Micah Statler is head of training for ATS. He says once ATS finds the workers with the right mechanical, electrical, and hydraulic skills, they're given additional training tailored specifically to the needs of clients. Jonathan Register once worked in maintenance for an ATS client. Now he's one of 16 ATS workers at the Textron plant, a team that works better for Textron and for him.
It means I'm going to get more support. I got more training. I've got backing, I've got the resources.
Resources ATS clients can hire to raise productivity and hopefully profits. In Augusta, Georgia, I'm Mary Thompson for Nightly Business Report.
To read more about ATS and how it is helping manufacturing companies expand capacity and cut costs, head to our website, nbr.com.
Chevron posts a rise in earnings but a decline in production, and that's where we begin tonight's market focus. The oil company had better than expected quarterly profits because of asset sales, and demand for crude oil offset higher costs and a dip in production. But oil prices are falling as the dollar strengthens. That sent shares down 1% to $127.90. Hilton's results beat on the top and bottom lines, bolstered by an increase in business and leisure travel. The hotel operator also raised its full-year earnings forecast as it benefits from that increased occupancy, which means higher room rates. Shares rose just slightly today to $24.29. And the Allergan-Valeant battle took a sharp turn today. The Botox maker is suing Valeant and Bill Ackman's hedge fund Pershing Square, alleging insider trading. Allergan is fighting a $51 billion hostile takeover bid from Valeant and the firm, and it is also calling into question the legality of that pair's relationship leading up to the takeover attempt. Shares of Allergan fell a fraction to $165.62. Valeant was slightly higher at $118.21.
Shares of Mobileye soared on their first day of trading after the company priced its offering above the expected range. The Israeli developer of camera systems that help cars detect other cars and objects on the road sold more than 35 million shares at $25 apiece. The stock closed at $37, up 48% today alone. Justice Department announced today that Hewlett-Packard has agreed to pay about $33 million to resolve allegations that it overcharged the U.S. Postal Service for products over an 8-year period. Shares of HP down 1%, $35.19 on that news. Harley-Davidson recalling more than 3,000 of its motorcycles globally to fix an ignition switch problem that can cause the bikes to stall and crash. Now, the move is preventative. According to the company, no crashes or injuries have been reported. Despite that, shares were slightly higher today at $61.98. And Berkshire Hathaway posted late earnings and second quarter profit. They said it soared more than 40%, thanks in part to improved results in its non-insurance businesses. On that, the conglomerate's results topped earnings and revenue estimates. Shares slightly higher at the close today at a mere $189,279 and no cents.
Each.
Each.
Tonight's Market Monitor is calling the recent sell-off in the markets a short-lived retreat. And he says dollar cost averaging over the next 2 months may not be a bad idea. Joining us is Gene Peroni, portfolio manager with Advisors Asset Management. Good to see you again, Gene.
Great to be here, Sue. Thank you.
The thing that strikes me is the severity of the sell-off, the volatility that went along with it, and the fact that we took out some very key technical levels. How much damage has been done this week?
Oh, there's been some, no doubt. I mean, there was a lot of hair trigger selling. You could see it when stocks breached these widely watched technical support levels. And I think that really just had to do with a lot of anxiety. There'd been a lot of anticipation about a big correction. So we did see some panic selling, some irrational selling here by the end of the week. And I think that was depicted in the volatility index moving up as it did.
Let's get some names on your buy list here at these prices, Gene, led by Celgene. Tell me about that one and what your argument is.
Well, Tyler, it's one of the stocks in the healthcare group that I consider a core holding. It's in the biotechnology area. Of course, it's a large cap name there. What impresses me about this stock is its long-term performance history. That is, we did go through a pretty good correction in biotechnology stocks in the March-April period. This has been one of those biotechs that has not only rebounded, but moved subsequently to new record high territory. So I think that kind of durability in the longer term trend, the short term elasticity does indicate that this stock has further to go on the upside. I like the healthcare group, and I certainly like the biotechs here going forward.
And you also like Polaris, which competes with Harley-Davidson. It makes recreational vehicles and things like that. Why do you like it, Gene? I know it's had good results lately.
It has. The earnings in the latest quarter were the best quarterly showing in some time. Not only that, but the outlook by the company is also very strong. You know, so if you put a chart, if you overlay the charts of Harley-Davidson HOG against Polaris, you'll see short-term Harley-Davidson stock has been trending lower. This stock has been trending higher. Now, one of their divisions, Indian Motorcycles, kind of a reincarnation of the old original Indian, seems to be gaining some market share. But they have other recreational equipment, both for the consumer and for commercial use also. So this is a very strong company. Again, good long-term history in terms of performance, doing great in this market environment.
I saw one of those Indian cycles down on the Jersey Shore last week, and they're really beautiful. Let's move to your final pick tonight, and that is Western Digital. What's your price target here, and why are you in favor of it?
Well, I think Western Digital can move to the 120-plus area here over the next 12 months. Again, when we choose a stock for our portfolios, we're looking to assure that there are other similarly attractive stocks representing that same subcategory. So when we look at the data storage area, there are other attractive stocks, but in our view, Western Digital is the leader in this space, in data, audio, and video. So we think that this is a real growth area. Here again, another one of these stocks that's been trending higher and is just below its record high here, just a few points below it, despite the kind of week that we suffered through here.
Right. Gene, any disclosures for us on the 3 picks that you gave us?
Well, all of these stocks are held in our managed accounts and also in a number of the unit investment trusts that I supervise. I don't hold any of these stocks directly, but indirectly through the UITs.
Right. All right, Gene, thank you so much. Have a great weekend. Good to see you again.
Thank you, Sue.
Gene Peroni with Advisors Asset Management. Coming up, something that Tyler and I know a lot about, the big business of kids' parties, and how one woman took her love of games and arts and crafts and turned it into a very successful career.
And now, a bright idea that's turned into a career for a young woman who became a bit of a legend in the San Francisco Bay Area. She has been called the Martha Stewart of kids' birthday parties.
Who do you turn to when the kids make those special birthday party requests?
I want to be a princess, and I want there to be a dragon.
Or maybe
I want to be in a rocket ship.
Sophie Molesky has the answers and a knack for know-how.
We'd take a refrigerator box and turn it into a rocket ship.
As a young kid, Molesky started doing art projects with her grandmother and never stopped. After college, she became a New York actress. But that stopped in 1992 when her husband took a job in San Francisco.
I was like, all right, I got to do something. And so I started babysitting.
You have to cut the hole out?
Babysitting, as luck would have it, for A-listers, CEOs, movie stars, taking their kids' wildest dreams and turning their garages into caves, pool patios into pirate ships. Sometimes she learned the hard way, like the time she built a candy-filled dragon piñata with 10 layers of paper mache.
And I literally sawed the thing apart, so you learn by mistake. But it was still a great party. It was fun. And that's how it started.
Other moms noticed and began booking her to do their parties.
I was charging like $10 an hour. These are very wealthy women. They were like, of course, that's fine. They could see a bargain when they could smell it a mile away.
Now a 3,500 square foot warehouse is home to the props and supplies she's gathered over 20 years and thousands of parties. Her company, Sophie's Stress-Free Soirees, books more than 200 events a year. These days, the typical birthday party can cost more than $1,000. Corporate events and bar and bat mitzvahs run into tens of thousands. But do plan ahead.
For bar and bat mitzvahs, I'm already booked all the way through 2015.
Hi, I'm Sophie, and welcome to my world.
For do-it-yourselfers, Sophie's on YouTube. in case you ever need bubble snakes or shelf elves. She's even got a new book, Sticky Fingers, detailing things you can make with duct tape.
Say hi, Big Sophie.
But what really gets Sophie Molesky going is planting the seeds of creativity in her young partygoers.
This is the kind of thing that gets me all choked up about what I do. And it's like, oh, come on, you're a party planner. But they'll say, hey, Sophie, could I come work for you? Because I really love parties and I'm really interested in doing this as a business, my own someday.
I think she inspires creativity in every kid she meets.
Kendall Owings was at one of those birthday parties in the mid-90s and came back to work for Sophie as a teen. Since then, she's worked as a Kentucky Derby hat maker, taught sewing, and now she's starting a full-time job as a costumer for the New York City Ballet.
Can I see those scissors?
So just remember, memories made and lessons learned at those birthday parties can pay off long after the cake is gone.
How many people get to wake up and say that they're going to see the light bulb go off in a kid's imagination every single day of their life?
And Sophie's World has 6 full-time employees and anywhere from 40 to 60 part-timers she employs depending on the size of an event. That, Sue, is from the why didn't I think of that category.
Oh, no kidding. I have to say my kids never had that kind of an elaborate party.
No.
But listen, more power to her. She's
Right.
made it into a huge business. Good luck to her. All right, that's it for Nightly Business Report for tonight. I'm Sue Herrera in for Susie. Thanks for watching. Have a great weekend.
And I'm Tyler Matheson. Have a great weekend, everybody. We'll see you back here on Monday. I'm Tyler Matheson with a Nightly Business Report news brief. The job market recovery continues to march on, albeit a little more slowly. The economy created 209,000 jobs in July. That's its 6th straight month of 200,000 jobs or more. But it was below forecasts, and the unemployment rate did tick up to 6.2%. On Wall Street, the Dow Industrial Average fell 70 points. The Nasdaq dropped 17, and the S&P lost 5, capping its worst weekly decline in 2 years. One bright spot, though, Procter Gamble shares rose on better-than-expected earnings and an announcement that it plans to sell half of its brands to revive sales. Most automakers reported sales gains in July, but those increases were below expectations. And good news for drivers, gasoline prices are starting off the month of August at a 4-year low. And tune into Nightly Business Report here on your public television station.